While most people were asleep last night, the global markets were wide awake. Quiet decisions were made. Money moved silently across borders. And by the time alarms went off in the US, the financial landscape had already shifted. This isn't noise you see on social media. These are the overnight moves that often decide how your day in the market will really begin. If you want to stay ahead instead of reacting late, this is where your edge starts. Before we dive in, take 1 second to like this video and subscribe to the channel. It helps more than you think, and it keeps you plugged into what actually moves the global economy. This is the monetary shift, and this is your overnight market update. Let's start in Asia, where the trading day quietly set the tone. Japan opened with cautious optimism, but that confidence faded fast. The yen weakened again as traders digested signals that policy tightening may still be slower than expected. Equity markets struggled to hold early gains, especially in export-heavy sectors. When currency pressure rises, it often tells you capital is nervous, not confident. That nervousness spread across the region. In China, the mood remained tense. Markets reacted to soft economic data and ongoing concerns about growth momentum. Property-linked stocks stayed under pressure, and that matters more than headlines suggest. China's real estate stress isn't just local anymore. It affects commodity demand, regional trade, and global risk sentiment. Asian investors didn't panic, but they didn't chase risk either. That kind of hesitation usually means something bigger is being priced in quietly. Hong Kong followed the same pattern. Brief rallies were sold into, and volume stayed thin. When markets rise on low volume, it's not strength, it's uncertainty. South Korea and Taiwan saw mixed sessions, driven mostly by tech names reacting to global semiconductor demand. Even there, gains were selective, not broad. Asia ended its session without a clear direction, which often hands the baton of decision-making to Europe. As Europe woke up, traders had one question in mind. Is this a pause before another move, or the start of a deeper shift? Early European futures pointed lower, and when cash markets opened, that weakness became reality. Financial stocks led declines as bond yields moved unpredictably. When banks struggle, it's rarely about one company. It's about confidence in the system. Germany's market reflected growing concern about industrial demand and energy costs. Manufacturing data failed to excite investors, and exporters felt the pressure of slower global trade expectations. France and Italy weren't spared either. Southern European markets showed sensitivity to rising financing costs, reminding traders how fragile debt-heavy economies can become when rates stay higher for longer. Meanwhile, the UK market traded cautiously ahead of key economic signals. The pound held relatively steady, but equity traders didn't show conviction. Defensive sectors outperformed, which tells you something important. When investors hide in defensive names, they're not betting on growth. They're preparing for turbulence. Across Europe, bond markets quietly told their own story. Yields moved in ways that suggested investors were recalibrating expectations about central bank timelines. Not cutting soon enough carries one risk, cutting too early carries another. This push and pull is exactly why overnight sessions matter so much. By the time US traders log in, these expectations are already embedded into prices. Commodities also reacted while most people slept. Oil prices drifted lower as traders weighed demand concerns against supply discipline. Energy markets are no longer just about barrels and production. They're about global growth confidence. When oil struggles to rally, it often signals fear, not balance. Gold, on the other hand, stayed firm. That's a subtle but powerful signal. Gold's strength during uncertain equity sessions usually means investors are hedging quietly, not loudly. It's not panic buying, it's strategic positioning. Silver followed with smaller moves, still caught between industrial demand fears and monetary hedge appeal. In currency markets, the dollar remained strong, and that matters more than daily charts suggest. A strong dollar tightens global financial conditions automatically. It pressures emerging markets, increases debt burdens, and reduces risk appetite worldwide. Overnight dollar strength often becomes the invisible force shaping the U.S. session later in the day. So what does all this mean for you when the U.S. market opens? It means the playing field is already tilted. Futures don't move randomly. They absorb what Asia and Europe already priced in. If you ignore overnight sessions, you're reacting to a story that already has chapters written. This is why building a daily habit around overnight market awareness changes everything. You stop being surprised. You start recognizing patterns. You understand why certain stocks gap up or down without obvious U.S. news. Markets don't wake up fresh, they wake up carrying baggage. At the monetary shift, this is exactly what we focus on. Not hype, not noise, but the quiet transitions that shape the bigger cycle. Overnight sessions are where sentiment forms before emotion takes over. As the U.S. session approaches, watch how futures behave around key levels. Are dips being bought aggressively, or are rallies fading quickly? That tells you whether overnight caution turns into daytime fear or daytime opportunity. Pay attention to bond yields during the first hour. They often confirm whether the overnight message was real or just temporary hesitation. And remember, not every overnight move demands action. Sometimes the smartest move is understanding. Clarity beats speed, especially in markets driven by macro forces, policy expectations, and global liquidity. If this kind of breakdown helps you see the market differently, drop a comment and let me know where you're watching from. Share this video with someone who trades or invests but still wonders why markets move before the opening bell. These conversations are how we grow smarter together. While most people sleep through these shifts, you don't have to. Stay aware, stay curious, and stay ahead with the monetary shift.